Ladies and gentlemen, once again, please welcome your host, Kurt Pfotenhauer.
Do we like this theme song better than yesterday's? That's the question. I like having a theme song, guys. That's good. That's good. It's something everyone should try at least once in life. This is going to be a terrific show today. And we've tried to add some more chairs after yesterday. My apologies to the people who are standing. It's worth it. The first panel that we have today is of the 4 national underwriters. And we have their leadership with us. I want to say in advance that 2 of these people are actually past presidents of the ALTA. They have a long history with this trade association. One of the things you may not know is that we're the only trade association with an insurance product that is still together. That is, our underwriters and our agents exist in the same trade association. And let me tell you how much stronger that makes us than, say, the P&C guys, where their independent agents are over here, their underwriters are over here, they've subdivided into different flavors of insurance. We still have an entire industry under one roof. The relationship, particularly when it's in the competitive marketplace, isn't always easy. But what relationship is always easy that's worth having? The best way you manage a relationship is you talk. You stay open, you ask good questions, you give honest answers. I know each of the gentlemen I'm about to introduce, and each one of them is a unique and gifted leader in their own right, and each one of them is a straight talker. What we're going to do today is skip any sort of formal remarks and go straight to the meat of the matter. That is the Q&A. Now, I've got a whole list of questions here that I've kind of been working on for the last year and a half. You will also get an opportunity to ask questions, and the way you do that is by queuing up at one of the microphones in the aisle. That's going to be my sign to say, fire your question. Please don't make statements, ask questions. So this is not commentary time. It is question time. Be respectful, as I know everyone in this room is, and enjoy this panel. Right after this panel, we're going to go on to our keynote speaker, Mr. Hernando de Soto, whom I've had a few minutes to talk to, and my gosh, are you in for a treat, because he's the one who's going to tell you what it is you really do and how important it really is, if you haven't figured that out in the last couple of years by listening to us. We've brought in the real expert. Let me now introduce our panel. The first person I'd like to call up on the stage is a past president of the American Land Title Association and the current president and CEO of Old Republic National Title Insurance, Randy Yeager. Please give Randy a... Past president of ALTA, Malcolm Morris, current CEO of Stewart Title Guarantee Company. If you haven't noticed, Malcolm is a Texan, so... I would say current board member, I think probably a future president of the American Land Title Association in his career, and president of Eastern Operations for the Fidelity National Title Group, Chris Avenante. Finally, we are joined by the Executive Vice President and CEO of First American Title Insurance Company, a tremendous ALTA supporter, Dennis Gilmore. Dennis? All right, guys. We're going to let this conversation float a little bit, but I'm going to start off from big picture and move down into specifics. Let's just for the sake of the audience, I'm going to ask a question, and everyone should feel free to comment. If you agree completely with Chris Abenante, the best thing is to say, I agree with Chris Abenante. I've learned that.
That won't happen.
Okay. You just say it and get out of the way. You don't have to answer the question. Chris was brilliant. That was terrific. Look, we've obviously been through a monumental downturn in the housing market here in the United States. In fact, in the whole world. You guys each run major corporations. You spend a lot of time and money looking into the future. And you have to come up with an operating theory, a set of assumptions that guide your business strategy, both sort of in the near term, next 3 to 6 months, and in the next 2 to 3 years. What kind of assumptions are you making about the timing and the extent of the economic recovery? Randy, I'm going to just turn to my right. I like to do that.
Because we've got Hernando de Soto coming on, of course I can probably show him up a little bit with this answer. I don't think that anyone in this audience would say that we've been enduring the most robust of markets, and I think we'd be remiss to say that we think there's going to be a recovery in the immediate future. If you look at the foreclosure statistics that are out there, the number of REOs and the number of properties that are going to be dumped on the marketplace over the next 2 to 3 years, I think that you're not going to see a major recovery in housing prices, which is going to stimulate growth within the industry. Also, we just don't have the jobs yet to provide buyers for these homes. So it's going to be a slower recovery. I think the good part, I mean, it's a pretty negative forecast, I think, even over the next 2 to 3 years. But I think the good thing is that everybody in this audience is a survivor. You've been dealing with this for the past, year, 2 years. You've looked at your operations hard, whether you're an underwriter or whether you're an agent. You've dealt with it. You know how to deal with it. And you know how to prepare yourself for the kind of marketplace that we're going to be in. So, our industry has survived. We're all survivors. We're going to be there in the near term. We're going to be there in the long term. And it's because of all of you sitting out there.
Malcolm, anything to add to that?
If you look at when we expect any type of recovery in the housing market, it's clearly not upon us yet. Congress is currently dealing with an expiration approaching next month of the $8,000 first-time homebuyers tax credit. The industry and others have been pushing in the Senate to expand that credit to the originally proposed $15,000 tax credit for all homebuyers. We've got, we had at the beginning of this time last year about 12 million homes on the market. We don't need, we had about 12 million homeowners who owed more on their mortgage, Al, than their home was worth. And we have about 4 million homes on the market. The number of people who now owe more on their homes than their homes are worth has now grown to over 16 million people. And so we have, I still think, a road to recovery. However, I believe whether you're a Democrat or a Republican, that everybody is working together, keeping their fingers crossed, and working very hard toward a solution. So I'm going to give it a year. I'm not going to expect a big increase in the volume of business. The good news is, think of it as a lot of pent-up demand, and that even though it's not going to come fast and furious as it has in the past, that we will see housing continue to be important to America. It's important. Our house is important to each of us, and I do see a hope for the future. I have proposed a HELP Act, which is called the Housing Emergency Liquidity Plan, to bring in $1 trillion from overseas to invest in American housing.
Let me ask a follow-up on this. You've mentioned a couple of times now the government's role in the market.
Yes.
I mean, are we in an artificial market right now? I mean, I know the government's pumping gazillions of dollars of liquidity into the capital markets. Do we have a mortgage market? And I'm going to alter this question. You guys want to follow up on this? Do we have a mortgage market if the Fed stops buying mortgage-backed securities right now from Fannie Mae and Freddie Mac? Do we have demand if the home buyer tax credit goes away, or is this, have we just kind of made an artificial market? What do you think, Chris?
I'll tell you, my opinion on this is that we are in an artificial economy. Again, my opinion, I think the government, well-intended, and again, it's not about politics, it's not about Democrat or Republican. There were some real issues that needed to be addressed. I think Washington, interestingly at the Fed conference, the people we met with from the Congress admitted they had no idea what to do. They were pleading for our help, and help from any venue they could get it from. And so I am concerned, while I echo what Randy and Malcolm have said, I do think the loss of jobs has been a critical element that's hurt our economy. I think interest rates, think about this. Interest rates went below 5%, and last week they went above 5%, and it was like mortgage applications fell off the cliff. We have established some artificial expectations. We have, I believe, as an economic system, really created some just false plateaus that we aren't going to be able to maintain or sustain, and that's what we get into this artificiality where the government has to then do something so that our expectations are met. Growing up, mortgage rates of 7, 8, 9% weren't unheard of. You could get interest on your savings account 3, 4, and 5%. Today, none of that is real. It doesn't exist. And if rates can fall below or go above 5%, and that turns off lending, there's something wrong with the picture. I don't know, but believe me, if I had the silver bullet, I'd love to share it with everyone. I don't know what that is. I don't think it's the government continuing to take shots and pumping money into things and then taking a step back and deciding, well, maybe that didn't work, let's try something else. And what baffles me is the administration's opinion that they don't think they can extend the $8,000 tax credit because it may cost too much money. Think about that. How many hundreds of billions of dollars have we pumped into the economy with organizations that are struggling to save them because they're too big to fail? Well, I think the people of America are probably bigger, and they shouldn't be allowed to fail too. And if $8,000 helps them want to continue to invest, the government maybe needs to divert some of those funds into, I think, something that would be a little more critical and probably help not just our industry. Sure, selfishly it would help our industry, but it's really one of the underpinnings of our economy. The real estate markets have accounted for almost 30% of the U.S. economy. How do you ignore that? So I don't quite get it when the government talks about maybe $8,000 tax credits would be unaffordable. And then just to round out here, and I'm happy to turn it over to Dennis, I apologize.
Dennis is going to agree with you, by the way.
Okay.
So we pre-wired that.
Going
yes.
back, Randy talked about jobs. Absolutely, it's going to be a problem until jobs stabilize and people are reemployed. Our industry will have a problem. Malcolm talked about some of the things going on, and they're right. They're absolutely right. The MBA, their forecast for next year is a 20% decline over this year. Now, we got lucky this year. While I'm sitting here complaining about the artificiality that the government pumps in, we were all beneficiaries. Make no mistake about it. So I'm not complaining what the government has done. I'm just suggesting maybe there needs to be a little bit more thought about not only what they're doing, but how they're doing it. I think there are some other things out there, and we don't have enough time today, that the government could do to help they're just not doing it. So the MBA, if you use that, and we certainly do in my company, at least as a barometer for what's going on, they're forecasting about a 20% decline in mortgage originations. This year, their latest forecast. This is the other great thing. I don't know how many of you can run your business and just change your mind every quarter, but they get to do that. So their latest projection was 1.8 trillion. So if you take a 20% decline from that, pretty significant. But guess what? As Randy said, the people in this room will still be able to make a living and still help America and Americans fulfill their dreams because we do the right things the right way.
Anything to add to that, Dennis? I've got a question for you.
Well, I actually do have a...
All right.
Thank you for inviting us. Thank you for the very bright lights and the fishbowl effect here.
Just to make you feel comfortable. Right at home, like you're on your living room couch. Don't let them see you sweat.
I'm actually a contrarian here. I'm actually much more positive about where we are than it sounds like everybody else is. And the reason I say that is I do not think we're up for a quick recovery, but when we look at all the numbers, forgetting the emotion, if you just look at the numbers, the amount of foreclosures hitting the market now are down, and when we talk to the lenders, they do not have massive backlogs they're sitting on right now. The foreclosures that are hitting the market, if you set aside the human toll, they're being absorbed incredibly fast in most markets. And we're starting to see prices across the country now mitigate a downward trend, so they're flattening out. So we actually are looking for a more optimistic 2010, not a recovery by, not a upward sloping curve, but not a downward sloping curve. This is how we're looking at 2010 right now. When we look at the markets, what we're concerned about is the jumbo market is still very, very non-fluid. There's really no ability to get jumbo financing and place it in the secondary market. And then we're worried about the commercial market hasn't gone through its pain yet. But just the overall general mortgage market, we're actually more optimistic than we were any time over the last 2 years. And we don't really see any inflationary pressure. That will come, but right now I think there'll be such pressure to keep rates in that 5, 5.5, 4 and 7/8 range that we think it will stay that way probably for the next 24 months. Then the inflation will go crazy. Then we'll have all kinds of other problems. But right now, we're looking for a little more optimistic in 2010, and we do the same thing on the MBA forecast. And if you follow those things, if you go back last year, first it started at 2.1 trillion, it went to 1.6 trillion, back up to 1.8 trillion. So you basically can't run your business off those, or it's almost impossible to, because it's so volatile. But a little more optimistic.
Well, let me ask you something, just to keep it down, the ball in your court for a second. You've mentioned the mortgage markets. In 1993, there was no single lender who had more than 5% of the mortgage market. Today, 3 banks have 52% of the mortgage market. We've seen, as one obvious byproduct of this downturn, massive consolidation in the lending space. What does that mean for the title industry, if anything? What's going to be the impact on our business going forward? Yeah.
Well, obviously, we spend a lot of time talking to the big banks, the big 5, the big 3, and our view of the world is whether they'll be right or not is a different question. But when you talk to them, they think that they will control the transactions, both resale, refi. Now, we can all disagree if we think that's true or not, but you have to understand what they think. They think they're going to be able to control the placement of the transaction. And what they typically want us to deliver is something that's faster, cheaper, and error-free, and a good customer experience. I mean, that's pretty consistent. What you hear from them is kind of faster, cheaper, and error-free. We don't hear, by the way, and we don't worry a lot about them wanting to get into our business. And you may ask that question later. Mm-hmm. There's probably a lot of concern that people think they're going to want to get into our business. I just don't see it as an issue. Our business as a business has a pretty lousy return on capital. Banks wouldn't invest their capital into a business that has a lousy return, number one. Number two, they wouldn't want to deal with all the claims and all the conflict of it all. And they would be kind of non-competitive to their other large players. They may change, they may go in a different direction, but I don't see that as a threat right now. What I see them is constantly asking for it faster, better, cheaper.
Guys, any other thoughts on that topic,
yeah,
this
I think
consolidation?
I do think it probably challenges the model of the industry that all of us are familiar with, and anyone that's grown up in the industry. And that model is it's a local business. Mm-hmm. When you have the business concentrated in 3, 4, 5 players, the idea of local business begins to have to take on a little different feel, a little different touch, a little different smell, because now you have someone that has huge leverage in terms of what they can direct. And I would, like you, Dennis, I don't think they're going to be able to direct the sale piece of but I do think they're going to be able to direct the refi piece of the transaction. And if I borrow on my experience in Canada, where they've had 5 major lenders forever, that's exactly what happens. In Canada, they have very little to say about the resale transaction. They have everything to say about the refi transaction, and that's just the way it works.
Let me rephrase it. And I'm going to come to you next, Malcolm, and then move down to Randy on this. So we've got a scenario in which the lending community, because of consolidation and just the pure volumes at their control, is going to have a stronger. They're going to have more leverage. Malcolm, do you see and fear pressure from the lenders to lower proper search and clearance standards, to push the title industry toward a model of risk assumption rather than, sort of a P&C model rather than because it's cheaper, right? I mean, rather than traditional title insurance? Is that something that keeps you up at night?
I think I think we went through that cycle, and that we are living in the ash heap of that cycle. And I believe that the banks clearly are now looking at what is the security behind my loan. Is it right? Do I want a consumer who owes my bank money having major title problems and getting in a fight on whether or not they're going to keep making their bank payments? I agree, faster, better, cheaper, and correct. Always a mantra. We want our hamburgers quick through the drive-in stand. But I think that there is going to be a little bit of a flight to quality. I think there's going to be probably a spreading of the risk by the banks, spreading out their business to more of the companies. I see it as a better market to operate in. They're going to be looking at the quality of the offices and the agents that are turning out the title work. I think that's kind of going to get a new focus.
You see the same flight to quality, Randy?
I actually agree with Malcolm.
I got to write this down.
If you look back at this industry 5, 10, 15 years ago, and we were having this panel discussion, we'd have to enlarge this stage by about 5 times. Because there were a whole lot more underwriters. I mean, we're no strangers to consolidation within the industry. We're all still here. It didn't destroy our business models. I totally agree with what's been said here, that I think we've gone through the kind of credit underwriting stage that we went through when things were so hot and heavy, and we had all kinds of exotic loans out there, and there was a lot of pressure on us just to get something out so these lenders could get something closed. And I think that's behind us. And I think quality, for many reasons, not the least of which is that the banks have to look at their own operations in terms of what's going on, possibly on the illegitimate side of the business, and making sure that they have the security that they've always been afforded through title insurance, to make sure that one more checkpoint where your loans are going to be a good loan, one that's saleable, that you won't have to buy back. So I agree with what's been said.
So we're in a prolonged period, hopefully, of a flight to quality that extends to our product, and that the lenders are there as well.
Absolutely.
I'd like to make a comment. I don't think we should look and blame the lenders for the no-search products and other things. We all are the ones that created these things. We all are the ones that sold them to them and gave it to them. So we need to hold ourselves accountable. And while it may have looked good in hindsight 5 years ago, obviously we've all had probably very poor claims experience on these products. And I'm guessing most of us have eliminated all of these type of products, or by and large eliminated them. At least we have. And I think if we keep that in mind as we go forward and issue products to the lenders, if they don't have the right risk component, don't issue them. But don't be short-sighted about it, is how we're looking at it.
Are you willing, you think the industry and your company, are you willing to stick by well underwritten product, in other words, in safe products, even if the competition in 2 or 3 years starts to push toward a faster, cheaper, frankly, less reliable product?
We shouldn't just make the connection faster, cheaper is poorer.
Okay.
But I think we've all had a fair run at the claims lately, and we've had enough time to be a little retrospective about a poorly constructed product and how costly it is.
What did we discover, guys, from the claims trends? What came out of the claims we've been paying lately? I know they've been dramatically up. I know that's part of a cycle when you get into a foreclosure cycle. Were there any particular trends at any of your companies that were revealing about title insurance? Was it all pretty typical stuff that you'd expect to see in a downturn?
And I think just start where Dennis ended with, we probably have ourselves to blame. I think to varying degrees, and not everyone doing the same thing the same way, but I think everyone at least in the same ballpark. We're trying to find ways to be more responsive, to meet the demands of the marketplace, and in that effort, we were also willing to probably do things differently than maybe we're willing to do them today.
Good point.
Good point.
Well, I think if you look back about 2 major refi cycles ago, when the industry maybe had our technology beginning to roll out and so forth, the calls came fast and furious to you in the audience. You'll all remember those times, and the lenders couldn't get a response as quickly as they wanted, and they began ordering, from 3 local companies to see which one could provide it the fastest. Your fallout rate ran up to 60% in many of your offices in doing unpaid for work, and that was not a good model. And I think that resulted in a huge ramp up in technology in all of our companies to be able to handle the volume of transactions. We saw 2003 volumes roll through, and our industry was able to handle it without that type of backup. The volumes hit over $3 trillion. I think we got a little loose, a little fast, a little slack on the searches, shortcut, and I think those things have led to a lot of the claims debacles that we have seen now. Going forward in the future, do I see that kind of a volume? No, I really see a more sustained pickup in volume, everybody working together, get the glut of houses off of the market, and get people back into houses. I remember getting on an airplane when we knew something was wrong, when the stewardess said she had just contracted for her 3rd condominium, and no, she didn't put any down payments down, but she had gotten a letter of credit for the bank to put down the down payment. I said, this is probably a bubble.
Prescient. Let's stay for a second. Did you have anything to add to that, Randy? Yeah.
Let's move on.
Let's move on. I want to go back to faster, cheaper, better. Okay. Let's talk about technology for a minute. Malcolm, I know you have a lot of investment in technology. Every one of you guys is invested in technology. Technology is transforming every sector. It's usually a productivity enhancer when it does, when we figure out how to apply it. How is technology changing the title business? And what's your own company doing to adapt?
Now, let me just borrow a phrase from our CIO, Rob Chapman. We were talking about it this morning. Our philosophy has been to be on the leading edge of technology, not the bleeding edge of technology. Generally speaking, if you're out there first, you're taking a lot of risk, a lot of experimentation in terms of developing your technology and what you ultimately want it to do. Technology has certainly changed all of our businesses. But the way that it's changed it is in terms of efficiencies. It does not change the primary quotient of our business, which is the relationship portion of the business. Technology helps you maintain, build on the relationships that you've developed over the years, but doesn't necessarily grasp those relationships for you. It's dealing with the Chris's, the Malcolms, the Dennises, and all the people out in the field, and primarily the people in your operations that have built our industry and will continue to, support our industry. The technology is there, as a support mechanism for what we really do, and that's provide service in an efficient and cost-justified manner.
Any other thoughts on the topic of technology and its impact on the title industry? Where is it going to take us?
Just make a comment since I was waiting for my right over here. Stewart has been active expanding globally and has come up with our Landfolio product that allows us to automate all of the land records. And I'll never forget going into one country and being so excited to see it installed, see a country go from literally backwoods to the 21st century, and got in there and they had made sure that they kept enough jobs to where the technology would move a process from one desk to the next desk of who used to have that job, to the next desk of who had that job, and we had to put in stops in order to make sure that all the persons who were political needed employees all had a job to do. And I think here in kind of the back end, so I'll say going in reverse, what we're trying to do is take our disparate technologies from formerly our title side to our escrow side to our getting everything recorded and make that one integral system to where you don't have rekeying, make things work the way you would like to. I'll never forget being at an underwriting meeting that we were putting on for agents, and I saw one agent bolt out of the room and say, "Oh my gosh, I forgot to tell Mary about this lien that's coming of record tomorrow, before they close this deal." With technology, we can avoid that. It's not having to remember to tell somebody we're getting that in. And that moves to faster, it moves to better, it moves to safer. And that's really where we're focusing what we do.
I want to just remind the audience for a second that you do have an opportunity to ask questions. I've got 2 microphones right here in the center of the room. And the deal is you don't lose your seat if you come up and ask a question. Chris, back to the issue of this current market and the downturn and what it's done to our thinking. One of the casualties of the market downturn that I've been hearing about is the cancellation of a lot of agent contracts. And I want to ask, I'm going to start with you, but I want to ask each of you guys, is this true? Is it a trend? And what's the thinking?
I think for those of us with a little more gray hair, there's a couple of things you understand. This kind of economy, the loss of agents and unfortunately underwriters, has not been a new experience.
Okay.
First of all, the economy has had something to say about that, and the impact has been felt. But I think more importantly, and now I'm going to get back into, and I thought we had a screen mesh set up here, so I'm just making sure the rotten fruit's been put away. All kidding aside, these are some of my best friends in the world are in this room. Doesn't mean we agree on everything. Doesn't mean we do the same things the same way. But we are in business. And being in business means that you need to do what's right for you, and we need to do what's right for us. And sometimes there's disagreement there. And more often than not, we can work out the disagreement. But when we can't, sometimes it's better to just part ways. So has my company taken an aggressive stand in terms of the cancellation of agency contracts? Yes. Have we done it in the last 12 months? No. We've done it in the last 36 months. And again, did we see this coming? Maybe. Did we forecast that sooner or later the highs that we were all on were going to be problematic for the industry? Maybe. Did we anticipate that we just couldn't keep going at the pace we were going at and surrendering a value system that said we need to do the right things the right way? It just wasn't making sense anymore. And I'm sure there are people here that would feel they were unfairly or unjustly canceled. And I suppose I can certainly, and I am certainly willing to talk about it. Not up on the stage here, please. But the reality is the business model has had to change. And the economy has forced some of that. The rise in claims has forced some of that. The way business was being conducted has forced some of that. And sooner or later, you make a decision. Who are you? What are you? What do you want to be? And how do you want to run your business? And it may not be the model that we were all used to, because maybe that model had some flaws.
What is the new model?
I think about some things, and if you haven't read it, you ought to read it. And it's my friend Mike Pryor wrote something that says, I sell title insurance. Mm-hmm. And I think the new model is the old model, which is we go back and we actually search the records. We actually, and it doesn't mean you can't do it quicker or better or cheaper. I mean, you can use technology to do these things and certainly assist in the process, but I think you have to have some of the basic tenets, the things that really are the foundation of our business. Yeah. We're an assurance business, not an insurance business. And we assure that the records are accurate and that the transaction that we are purporting to insure is actually a valid transaction. And you can only do that, I think, whether it's with technology or you still have to go and flip pages in a book, but you can only do that if you actually look and read what's there.
Dennis, thoughts on agent contracts, the new business model?
I don't know if it's a new business
back
model.
to the future?
Yeah, I think it's back to the future. We have done a lot of the same things. And we will look for deeper, stronger partnerships with our agents as we go forward. We've all probably been, you may not see it the same way we see it, because we see it on a global basis, but there's been tremendous exiting of this industry from agents that were kind of Johnny-come-lately. They really weren't title people. They probably shouldn't have been in the dang business in the first place, and they cost us all a lot of claims. And for them to depart is probably a good thing. We all probably want the same thing, which is a good, strong agency relationship long term. And I think it will go that way more so in the future, by the way, in our perspective, and that is we're going to probably be held further and further to a legal standard that to our agents' behavior. We have historically not taken that position, but I think we're all under a pressure point to make sure that everything's the same, and we're going to be looked to make sure that our agents are performing accordingly. Anything to add, Randy or Malcolm?
Yeah. Let me add this, because we're the smallest of the four companies up here. But we've got probably a different strategy than everybody else, because about 80% of our premiums are written by independent agents. And over this past year, we've actually doubled the number of agents that are Old Republic agents. Much of that's attributable to my good friend Chuck Kowaleski and the venture that we've done with the fund in Florida. But having said that, contract is between two companies, and I think, as everybody is saying, it applies to both sides. We would expect for people not to do business with us if we didn't live up to our part of the contract, and vice versa. So, are we looking at contracts harder than we ever did in this climate, and making our controls more stringent? No, I think our controls are exactly the same as they've always been. In our review of operations, agents, and our own operations and how they support our agency base is always critical. We've put a lot more money into it this year, simply because of the numbers and trying to keep up with it to make sure that the support services that we give are adequate, and that on the agency side that if you need help with some issue, that we can give it to you and deter a problem before it becomes a large one. So much the same. I mean, we have canceled agents this year. An extraordinary amount? No, I don't think so compared to the number of agents that we have. But we believe in the agency model. It's always been our model. We have very few direct operations, and it really has worked for us. And hopefully it's worked for all the agents that have been associated with Old Republic.
We've got a question up here. Mal, if you wanted to say something, I'm going to let you on that issue, but otherwise we'll just take this question.
Let me just say that Stewart has canceled agents. I remember growing up, there might be 3, 4, 5 agencies or places to acquire your title in the town. When you saw that growing to 80 different agents in one city, you knew things were getting incorrect. And when we looked at our agency base, we looked at what we could do as our affiliated operations. In those places where we had affiliated operations, we knew what the loss ratios were, what we should be expecting. And when we look at the great majority of our agents, I would say their quality exceeds or equals that of our company. We clearly combed through our agency network, and those that were creating, I would say, losses actually approached 100% of remittances, in many cases 200% of remittances, not over a one-time lightning bolt, but for a consistent period of time. And clearly I think we got too many folks in the business. If I'm an agent and I have been there, I'm doing the kind of work that I know that members of the American Land Title Association are doing, I think clearly your job, your role is safe, and you're the kind of agent that we want at Stewart. So I'll put in a plug for that.
We got all the way
We've
until
signed.
Randy kind of started it. I mean,
Yeah.
you
We've
did.
signed
It's a soft plug.
And I do apologize.
I would say we've signed quite a number of agents this year, and we're very pleased with the type of quality agents that are coming to Stewart.
Please introduce yourself, tell us your company, and then state your question.
I'm Doug Bella with the title team out of Pasadena, California. And I thought somebody should break the ice and ask a question. And I actually have 2 questions. There's been a lot of talk about claims this morning.
You got to give to tie pack if you're going to ask 2 questions. That's the rule.
My name is on the
Yeah, Max
roster
donor.
over here.
Only Max
It's at the
donors
bottom
get 2
working
questions.
itself up.
All right.
Years ago, the average claim took about 3 years before it hit. That's question number 1 is, what do you think the average time is for a claim to hit? And question number 2, is there a common claim that keeps coming back, or is it just all over the board?
Can I take a crack at this? Good questions, Doug, because we look at this a lot. It would seem, I think there was an industry standard at one time. We felt claims had like a 3-year tail, and that you would see the bulk of your claims. Interestingly, in the last few years, we were seeing over 30% of our claims hit in the first year. So policy would be issued in January. We could count on 30% of them turning into a claim before the end of the year. Bad deal. In terms of highest incidence of claim, has been, continues to be, at least a third of the claims today are still what we should be doing, search and exam. The real basics of what we do are still the biggest source of our claims experience. And that's a little scary to me. It should be scary to all of us because it threatens our very value proposition.
Yes.
What we sell is the very thing we apparently haven't been able to deliver.
Wow.
Agree.
Agreed? Any other?
Yeah, I'd add this. In terms of sheer volume of claims, I think that search and exam certainly is the highest. In terms of actual dollar volumes, mortgage fraud produces our greatest dollar amounts that we're paying out nowadays. And that's something that, I mean, if you really look at it, it's casualty business because it's something we can't, we're people that look back and say, history says you're okay. And we look back and these criminals haven't been thrown in jail yet, so they're not okay. We don't know that they're not okay, and we're not knowing what they do to us on a go-forward basis or right after we've been in and done the audit. And that's where the problem occurs. So, and there's certainly a greater incidence of that now than there ever has been.
I was going to echo that. We see clearly the highest volume of claims, basic search and exam or escrow claims, those type of things. But by far the most devastating claims for us are the fraud, criminal intent or non-criminal intent. They are catastrophically large claims at times, and that's what we all need to guard against.
Yeah, just to round out and give you just a quick snapshot, fraud 5 years ago was not among the top 10 incidences of claims. Today, it's at least the second largest cause of claims. Right. And that's only occurred in the last couple of years.
Yeah. Jim.
Thank you.
Thank you, Doug.
It worked. Somebody else is asking a question.
Yeah.
Jim Stepanovich with Old Republic Title. I'm curious about what you think about this situation. I'm seeing, we have these big foreclosure houses today that are doing the foreclosure stuff, and then they're doing the REO stuff on the back side. And we're being approached by them, and they're asking us now, and they're currently doing this, where they simply issue a product, and it's an owner's policy on the REO sale of the property, where they simply say, subject to all general easements, restrictions of record. And they're currently doing this, and probably most of the underwriters are accepting that, whether you realize that's going on or not. They're coming to me and they're saying, well, okay, will Old Republic allow you to do that? And I'm going, how do we do that? What's the meaning of an owner's policy? What's your feeling about that? And I hope you say you disapprove of it. If so, are you willing to do something about it?
I don't think I have to answer, do I?
Yeah, it was clearly a softball.
Oh. Dennis invented that.
I'll come back to an earlier comment that we have to guard against. And the earlier comment, as I said, the large lenders are going to exert tremendous influence over certain channels. Now, they may think they can control all channels. Again, I don't think they can. I do not think they'll control the residential channel. But they will control, ultimately, in my opinion, the refinance channel, the default channel, and the REO channel, ultimately. And where it's difficult and challenging for all of us is where they control a channel, there's a high likelihood that they're paying for the services that the borrowers aren't paying for them. Like in a default, they're paying for it. So they're going to present to us a tremendous amount of pressure to do it cheap and fast. And I think our job is just to resist it where we can and where it makes sense. We cannot take on untold risk. It's bit us already over the last 5 years. So I'll just tell you, we're not looking to increase our risk profile right now in this type of stuff. But the pressure won't stop. These lenders can control and will try to control these channels.
Malcolm, did you have something to add to that? Because I've got one more question for this panel before we pull off the stage.
Go ahead.
All right.
Ask your other question.
New question. January 1, RESPA, thanks Jim, RESPA rule goes live. Are your companies in a position to handle it? I know everybody's been working hard, but let's just keep it short and go up and down the line. Randy, you guys ready?
You're not going to hear that we're not prepared.
Of course. Yes.
What is that?
Yeah. How do you spell that?
Yes, we're prepared. Our technology has embraced the changes. I think the problem is going to be with the lenders. I don't think the lenders are at all prepared for this. I think a lot of them are going to ignore it. We had a discussion in the underwriter section yesterday, led by Mr. Avenatti. And they're going to try to shift the liability for not complying with the new RESPA rules onto the settlement service provider. And I think it's a big problem that we're going to have to address. As ready as you are, and on January 1st, when you roll out, it won't be on the 1st, well, some of you probably work on the 1st, but on the 2nd, when you roll out your first closing, you have to fill out 1101. they're not going to be prepared. You're not going to have the figures to do it. They're not going to know how to fill out the new HUD statement. They're not going to give you the right figures. You're going to have to search, try to figure out what it is, and then some class action attorney is going to sue us all.
Great.
That's normal. It's part of the business because we didn't accurately reflect the costs according to the new HUD reform. So, and I think that's what we've got to look forward to in this endeavor more than anything else. It doesn't scare me a lot of the stuff that's been put into the new HUD it really has no meaning for the consumer. There's so many disclosures in the forms that we've been filling out over the past 20 years. The consumer is overwhelmed. The information that's in there, I think, some of the information on agency splits, things like that.
What about that? Just stop for a second. We're going to have splits, part of the public record, ostensibly, for the first time. Is this disclosure of the premium split going to change relationships with agents? What happens when everybody knows everybody else's deal? Does it create new pressures on any of you?
Do you want me to continue?
Sure, keep going. That was a good point. I didn't want to
Okay.
lose it because we're running out of time.
Okay. I think, it's not as dangerous. I think all of our companies negotiate what we believe to be fair splits where we don't have promulgated splits. So, I'm not afraid of, showing, the public, for instance, what our splits are. I think this is nothing more than fodder for regulators and attorneys that are looking for another way to classify agency commissions as nothing more than sales commissions. And that's the battle we've been fighting in this organization and each of our operations since I've been in this business since 1975.
Might happen if we stop calling them commissions.
Yeah.
But any other thoughts on this cluster of topics?
I would just say that, yes, we are ready. I would have one admonition to everybody in this room. It is a mantra that we are repeating within our offices to our agents. When you quote a fee to a lender, that shall be the fee that you charge on your RESPA. Do not change your fee. If you underquoted, too bad. Charge it. I think the public is going to be looking for truth in what they get disclosed. So if you need to raise your fee, do it on your next quote and don't do it on that closing. So if I could say that to you. Second thing that we are doing at Stewart is we're going to our lenders and say, hey guys, we don't want to get you in a bind. We don't want to see our entire industry come to a halt. So in every town where we are, we're asking our lenders to practice now. So we'll run through some dry runs with them. We'll let them see how this works. Get the glitches out this year before January 1st of 2010. So I would say if you're in your marketplace, you're an agent, go get with your local lenders that send you business that are your customers and practice now.
Any closing thoughts, guys?
We're absolutely ready for it. I don't foresee any issues whatsoever, but you may want to follow up with that on January 30th. I feel strong about that answer.
The next panel. We'll start with this
I
question.
feel like I'm sitting in the exit row. Yes, we're ready.
We're ready.
I
Okay.
can handle it.
Again, follow up on the 30th, huh?
Hey, folks, we have got some enormous talent in the title industry. I've gotten to know that about many of you. I hope you've seen that there's a lot of talent sitting in the corner offices of these national underwriters. I know how busy your jobs are. I run a tiny operation, you run large operations. I can barely catch my breath. It is remarkable that you're down here spending time with us. Thank you for what you do. Thank you for your thoughtfulness. Thank you for your candor. Thank you.
Ladies and gentlemen, once again, please welcome Mike Pryor.
Shut it down. Don't applaud for me. We got stuff to do. Wow. We got something coming up. But I want you to remember, these guys that were sitting up here, these four, Find them, tackle them, wrestle them to the ground, thank them, because it's because of them we have this next speaker. I promised to do anything I had to do if they would support the next speaker's getting him here. I said I would set my hair on fire and run naked down the street if that's what was required. Fortunately, they didn't require that. Fortunately, they didn't. But these 4 underwriters did foot the bill for this. They stepped up to it. They said, we agree with you. This is one of the most important speakers that we can have at the American Land Title Association. Hernando de Soto is an incredible person. He's one of the brightest minds of this century. He's been called one of the leading economists in the world. He runs the Institute for Liberty and Democracy in Peru. He founded that. It's one of the top 2 think tanks in the world. This guy is a creator. He has such a brilliant mind. I'm telling you, if you can just grasp a little bit, just a small portion of what this man has in all the books he's written, but if he, just a little bit of it, he will absolutely change the face of our industry and the way we talk about our industry and the way we understand it, because he is in developing countries helping economies be formed. And it goes back to property rights. Everything he talks about goes back to property rights. Not just land, but certainly land, and the way it's recorded and the way it's transferred and the way it comes along. And I'm telling you guys, I could talk about him for an hour, but it would do it injustice. Please welcome the brilliant man, a great man. He's almost like a god to me. This guy is incredible. Please welcome Hernando de Soto. Go get him.
I'm going to try and survive that presentation. My real friends try and bring down expectations, and then you start looking good. But thank you very much for your kind words, Mike. I asked my hosts yesterday evening what they expected. I mean, we do a lot of things in different parts of the world. What would you like to hear about? What do you want to know? What can I say that's of use? And then I think the main message I got from everyone who was available for dinner last night was, you are a very big admirer of the United States as a nation that has been able to organize itself collectively, that's been able to develop itself. And you think that a lot of this development was based on the way they manage law, on the way that they can provide security for the things they do. And we think that our colleagues and friends, the ones you're going to be talking to tomorrow, this was yesterday, don't fully realize that. They don't fully realize that, though they are the central part of that. And it's important that they become conscious of it. And this, of course, happens frequently. This is this was used to be, as a matter of fact, was one of the cornerstones of Albert Einstein's whole idea of the theory of relativity. He used to say, where you are, to put it very simply, where your position gives you an angle on reality that's different if you had another position. And his famous quote was, what does the fish know about the water in which it swims? So the whole idea was that you got a fish swimming there, and it says it's so easy to move and to float and go up and down, and somebody standing outside tries to do the same thing, falls, and the fish can't teach the other people because it doesn't realize that there's so much water that allows them to do it. And being on the outside looking in gives you a descriptive advantage. So that's what I think our hosts want me to talk to you about, which is I, a third worlder, a South American, see you probably in a different light. As I try and find for my country and for all the other about 30 developing and former Soviet Union countries that we've been called into by heads of state, what I try and do is basically find a way that we can quickly get to where you are today, or as quick as possible. And in my understanding, this means essentially bringing in the rule of law. And the rule of law is basically the social contract, the rules of the game on how we relate to each other. That's a rule of law. And and to do that, you have to start, is my thesis, from property. It's the first basic thing that is needed. Why? Because in my part of the world, and even the Soviet Union, maybe only 30% of the people have got clear, straight property rights. There's no doubt as to the fact they own their home, their house, their business, their identity, and most of the rest don't. Just a few numbers. In the case of Tanzania, where our team has been over about 970 people working with government to cover all 26 districts. In the urban sector, it's only about 2% of the buildings and the land and the businesses that are actually on record, that exist formally according to law. It's 2%. In the case of Egypt, it's about 11, 12%. And if you talk about businesses, about 18%. And Egypt is a well-structured country. In the case of Mexico, it probably doesn't go above 50%. Maybe it's even shorter than that. Maybe it's 40%. In other words, you pick up a book and say, who owns this in Oaxaca? And the book doesn't really tell you who owns it. It might give you an indication as to who may own it on the basis of some record left there 30, 300 years ago. So the majority of those, we are about 6.5 billion people in the world. The majority of people in the world are outside that rule of law system, as a result of which they can't make progress, because all progress is based on the idea of the division of labor. People specialize, you do your thing, somebody else does something else. And so you can't actually get wealth unless you are part of this system. The traditional examples go all the way back to Adam Smith, who was the first to say, if you have a pin factory and you're just 2 people, you can produce maybe 5 pins a day. But if you're 11 people that bring different parts of the pin together, you can produce up to 48,000 a day. So that was one of the first statements on the division of labor. Karl Marx, who was his opponent and lived about a century later, also agreed that that was the reason why the Industrial Revolution in the 18th and 19th century was triumphant over the old traditional feudal or patrimonial system. It was because so many people could piece things together, like locomotives. He talked about it being 5,000 parts. What they always were saying is that people were able to trust each other, to be able to bring 5,000 parts from different parts of the world and create one product. But they never actually got into something that was very important, which is that they were able to do this because they trusted each other, because they felt assured that they would be paid. They knew that whoever was supplying them was the real supplier, that he hadn't stolen the merchandise and that he could deliver it. This was illustrated, of course, in much more clarity later by an economist called Mead, who talked about the making of a pencil. If you ever get a chance to read it, most economists do. It's a short essay called I, Pencil. It gives the history of an American pencil and goes all the way from the fact that he comes from the wood of Oregon, and then the wood has got to be cut, and then it takes a machine that comes from Canada, then it's got to be killed, and that takes a machine that comes from Germany, then it's got to be sliced, and that takes a machine that comes from elsewhere. That nobody generally likes to deal with white wooden pencils, and therefore you need a dye, and that comes from someplace else, and then wood is not enough, you've got to have graphite. The graphite comes from Sri Lanka. Trouble is, the graphite from Sri Lanka is brittle, and not to break, you need candelilla wax from Mexico, and then the candelilla wax then softens it up, but you need 2 or 3 other products that come from India. At the end, nobody likes to hold a pencil that isn't easy to flip through your fingers, so you need 3 layers of lacquer, and from one country and 3 layers of lacquer from another country. We all make mistakes, so we need an eraser at the end. The eraser is put at the end of the pencil with a filament of metal that is made out of, it's always yellow and black and yellow. That's zinc from Peru, that is copper from Chile, and black nickel from Nigeria. By the time the pencil's finished, there's 17 countries involved. So how does 17 countries and 300 suppliers understand each other so as to have that moment of unity, as Husserl, the philosopher, would call it, where all the things come together and form that pencil? I mean, there isn't one thing around in this room that's being built by one person. Everything takes a multiplicity of things to be done, and the higher and more sophisticated your combinations are, the more surplus value you add to whatever you're doing, and that's what you are wealthy countries for, because you have this capacity to give security to transactions. And ergo, my enormous admiration for the legal systems of the West, including, of course, first and foremost, the one of the United States, where you manage to establish a degree of security that's important. And sometimes you lose it, and big crises come, but you have this capacity by reaching out to the law to put it all together. So, what I admire enormously about title insurance, about property, about everything relating to the law of controlling things as opposed to controlling people, which is the political system of control of the fascist and the tyrannical state, is essentially that the way I see the United States, the fish looking at the water, is that you were the country that did the most to establish and give substance to the word called fact. A fact is something very important. Facts are man-built, or shall we say human-built. You don't see facts growing on trees. Facts are statements that can be tested for truth, but that establish that something is so. Now, this was very much the preoccupation of 19th century philosophers. And 19th century philosophers, especially the semiologists or semiotics, the semiotics people in the United States, to a great extent, went around to try and define what a fact was. And that idea has continued in philosophy over time, because philosophy has a tendency to reflect the problems of the time. Otherwise, they wouldn't have anything to hook on. And the way you can read them is the following. It's to say, a fact is not a thing. A fact is something that lets a thing connect to others. In other words, you only need a fact if you're going to connect two things together. If you're isolated, you don't need facts. You need a fact because you're going to relate to something outside yourself. And so the person who actually worded this the best, and this is not going to be a long philosophy lesson, but it's the basis of what I have to say afterwards. If you really want to get to understand this, there's nothing like reading a very complex philosopher that at the end also gives you everything in a little teardrop, a little nugget, whose name is Ludwig Wittgenstein, who says, when was asked to define the universe, he said, the universe is things standing in relationship to each other. Things standing in relationship to each other. What he means by that is that the universe is made up of things and is made up of relations. And it's important to keep the two things together, the two things apart, to begin to understand what I have to tell you. For example, in that sense, I brought along with me an apple that has been given to me and is my property, by the way. I've got various witnesses. This is my apple. Okay, now you look at that apple, and it's very simple, as long as I'm here alone with it. But the moment I'm going to use it in one way or another with you to make a transaction, sell it to you or whatever it is, or you want to find out if it's really mine, there's nothing in that apple that says it's Hernando's apple. There's nothing in that apple that says where I got it from, where it was grown. If I can sell it to you, if I can lease it to you, if I can lend it to you, if I can use it as a guarantee, if I can mortgage it, if I can lease it, I can think of 100 things on how this apple allows me to relate to the rest of the world, but it's not in the apple. So apples are one thing and relations are other things. Now, how you capture an apple is relatively simple. You put it in a crate. You let it hang on the tree. You cut it up into little pieces. You make apple juice with it. It's got its own life. Philosophers would call it its own extensional life. But how about its relations? Or how it allows me to relate to the rest of you? That has got to be captured in a definition. another philosopher comes along called Bertrand Russell, and he says, you know, what we're really talking about here is the problem of knowledge, the problem of how you get to know things. And there are some things that we know by direct acquaintance, like a lot of you whom I have had the pleasure of meeting in the last minutes and hours. These are people you can touch, you can look into their eyes, and there are a lot of things that you know by description. And those things that you know by description are relationships, those abstract things that are not in the apple. And that knowledge by description, or by prescription I would add, which are formulas, is what gives the meaning to all of this in social life or in economic life. So for example, and bear with me through this just about half a minute, when I came to the United States and I went through the Miami airport, and a gentleman there at Migrations asked me to identify myself, and I said, you know, my name is Hernando de Soto de la Jarugarteche Landazo y Vargas, and I come from Peru, and originally my folks came from Genoa in Italy about 400 years ago, but now they didn't really, you know, have the name de Soto then. The thing is that this Alchato fellow married this de Soto lady from Jaén who had more money than he did, and he said, stop. Just show me your passport. And then I gave them my passport, and there he had all my relations, because he's got no other way of capturing them. That tells you how I'm related to my mother, to my father. I'm married, not married, where I've been, what I've done, where's my address, do I need yellow fever, don't I need yellow fever, all sorts of things from which, by the way, if he takes and puts in the computer, he can branch out to the rest of the world and find everything there is to find out about me. So, my admiration towards the United States and the property system is that you've done a much better job out of this than the rest of the world. You've actually got knowledge by description within a legal system that gives meaning to all relationships. Relationships, of course, being obvious. When you insure, when you assure, when you guarantee, when you make a contract, it is basically all about providing trust. So different elements like apples and pencils and watches and clocks and everything that gives us our standard of living, stethoscopes, microscopes, all the kind of things that we need to live longer and better are possible because they allow this combination of what Bertrand Russell would have called little patches of color, which is micro-facts, to become one big fact. In other words, this passport has a lot of little micro-facts, the little patches of color that Bertrand Russell would have called, which are, it's got biometric stuff, the distance between my nose and my eye, the right one and the left one, the distance between my mouth and my ears, the distance between my shoulders. He asks me to put my 4 fingers so that he can identify, and he compares it with the fingerprints he's got. So all of these are micro-facts. And if you get enough micro-facts crossing each other and saying, yes, this is De Soto, then you've got a fact that you can assure and that you can insure. And in a world of facts, we can live, all 6.5 billion of us, because we will know how we relate to each other, what our track records are, whether we're trustworthy, whether we deliver in time, whether we produce, whether we say who we are, and we can avoid fraud. Because we human beings, we have to accept, come packaged in a way in which we've got good stuff about us. I mean, we've got imagination. And that same imagination, intelligence we have, are the things that allow us to invent all the wonderful things that are at our hands, are displayed, and allow us to get to the moon. But that same intelligence is the one that allows us to cheat and to lie. Because that's the other part of humankind, and we've got to learn to live with it. And what gets the facts, which is, I repeat, statements that are written descriptive and can be tested for truth, are essentially legal documents. And the main legal document in the world is the property system, because that's where it all begins. to start. Even if you think about anything else, talking about facts, everything is the result of having found a language to transmit standards to other human beings. We have learned to use a thermometer with some mercury in it to establish temperatures. And this allows a mother to say, my child's got a temperature. And he's got, if we were centigrade, he's above 37 centigrade. That tells them. There's no 7 types of thermometers. There's basically 1 type that says it. We've got blood types. This allows us to know what kind of blood to give to the right person. The whole world, what the West has managed to do is get a system of signs into place that allows us to communicate and allows us to cooperate, form that division of labor that both Adam Smith and Marx talked about, that allows us to actually cooperate at an international level. We even know even a policeman has got it as quick, actionable information. He doesn't have to be a university graduate to catch somebody, put a breathing test and say, you've got too much alcohol in your blood. You've got different states. And what stands behind the success of the Western style economics, why you are in the West so much more prosperous than the rest of us, is essentially that you've got a system of standards which allows you to quickly understand who the other party is. And a lot of institutions, like the title insurance institution, that actually gives you that element of information packaged in such a way that it produces trust. And I think that that's what's missing in the rest of the world, because it's relatively inexpensive, it's operated privately, it's competitive, and it gets you going towards development. As a result of this, you have now actually got, since the 1850s, due to a series of unknown heroes, people that if I told you the names you wouldn't recognize, Coquelin of France, or James Dudley Smith of the United States, or Rudolf von Gering of Germany, who after Marx and Smith were basically the guys who landed the capitalist system on its feet and created the legislation and the mechanisms that allowed all forms of insurance, of assurance, of title, of property to actually get into place. And they did it without really knowing what effect it would have. But its effects have been more than just telling you what I've been saying before, which is, are you telling the truth or not telling the truth regarding somebody's assets? It goes much further than that. It allows you, if you've got property, to tell the truth in many other disciplines that would not stand if the property industry weren't in place. To begin with, of course, and that you know much better than I do, the credit industry. Credit comes from the word credere in Latin, or credibility in English, which is, I trust you because you got something to lose. And that thing that you have to lose is that asset that I can prove that you own it or you don't own it, or what bundle of sticks that you've got it. There wouldn't be any credit without a property that's one way or other is either used for the guarantee, is collateralized, or informs you about an income stream, whatever it is. It wouldn't exist. Capital, which is when you're able to accumulate a certain amount of wealth. Will somebody please show me capital that is not actually described in a property statement? It's not possible. That's the only place where you can catch it, because it's like a relationship. It's in the air. It's got to be documented, and it's only there that it can exist, provided there is trust in it. It also goes, as I was saying earlier this morning, to money. I just have to quote this again. At a certain moment, I was called in by former president of your Fed, Alan Greenspan, who had read my book on property and said, I think that what you've written is fantastic. And of course, we have to study the property system and the monetary system. And they come together. I said, look, excuse me, but the money system would not exist without property. Sorry to be so fetishist. They said, explain. I said, well, look, if how do you know, Mr. Greenspan, how much money to put into the U.S. market? And he says, well, I have to know what the needs of liquidity are, what the transactions, because transactions are not going to take place with barter. They're going to take place in a representative form through an accounting measure that we call the dollar. And I try and find out how many transactions there's going to be in. And if I get the right amount of money on the market, it'll go well without inflation. Not enough, I will have deflation. This is more or less it. I said, fine. How do you know how much money will be necessary? He said, okay, I understand this is an intellectual exercise, so we'll go along with that. He says, I will try and see how much people are producing and they expect to sell. I said, okay, I hear you have a great intelligence service in the United States. Do you post them outside the factories, try and see how many sofas, how many Blackberries are going out, shoes? No. First of all, I don't run the intelligence service. Secondly, it's not that good. And I don't do it that way. What do? I go and I take samples from markets. In markets, John Wayne coming with all these steers into the market, 10,000 head. No, we don't do that anymore. You've been seeing too many cowboy films. What happens is John Wayne doesn't go to the market anymore. He goes out, he's got pieces of paper that says what he owns, or they're blips on the screens, and then they're traded back and forth. What kind of paper did you say that was? Property paper. I said, now, imagine you were the president of the Fed of Peru and I told you that only 50% of our assets are recorded. How do you know how much money to put in? And he said, gosh, that would be real difficult. I hadn't thought of that. You wouldn't have a monetary system. You wouldn't even know that today you are getting into the edge of hyperinflation if you didn't have all these records. So the reason that you generally have, except since starting last year, a solid monetary system is because you are able to relate it to assets. The paper doesn't make sense if it isn't calibrated. I mean, I can't put anybody's photograph in here. I can't put anybody's fingerprint. For that, you need a whole bunch of institutions that show you that the process was duly followed so as not to get fraud. When you start tampering with it, then everything goes wrong. Because that is the first thing that property indicated. You see, the first thing to really be documented in the world was land. And the reason you documented land in the world, because everything starts off from someplace, is because one thing that distinguishes all human beings is that we all live on the land. Nobody hangs from a balloon. And the land is the only thing that doesn't move unless you're Dutch. It doesn't move. And from there, you can then start creating identities. You can create property on paper, property on means, but it really, the fundamental thing is the land, the one thing that doesn't move for us. And so once you've got that into place, all other things begin working correctly. Even your police, your buildings in New York and Washington were bombed, that terrible action of 9/11. But 3 days afterwards, you were able to catch every one of the terrorists living in the States, because the land records lead to hotel records, lead to the possibility of handing out credit cards, lead to be able to find out where all the schools that teach you how to fly are, and in 3 days you could make all the connections that were necessary, and you caught them all. The ones in Afghanistan are still on the loose because there's no property rights there. Police only work with property records. They call it skip tracing. And how do I know this? Is because nobody told to me, so we had to pay somebody to enter the New York Police Department to find out how they caught their person. We don't see many people with uniforms in the streets in the United States, as opposed to third world countries. You see them every. Law and order is because there's a man or a woman with a uniform and a big gun someplace. In your case, it's a little bit more hidden. I mean, you've seen, of course, these. We're right down next to Miami Vice. Do you remember that show? I don't know if it's still on. It's all about two very good-looking cops that are always going after a Colombian or a Peruvian like myself. And with commercial, it takes about an hour, and it usually starts off about a very good-looking blonde. These two guys jump out of a red convertible. I think that's it. And they say, "Where is the Soto?" She says, "That rat, he didn't keep his promises. He's in 101 Ocean Drive." So off they go to 1 Ocean Drive. And then they move on to 353 Stewart Street because a brunette says that that's where I am. Finally, they catch me on a dock. One address after another address, another address. No security if you don't have addresses. All your wars being fought out, Iraq, Afghanistan, where you lose, you got no addresses. Very hard to fight a war without addresses. You need another kind of system of intelligence, and you're very dependent on addresses and very dependent on property. So credit, capital, money, security, collections, whatever it is, your whole system for governing in prosperity and peace is based on the property system. I'd like to say it's there. That's where it starts. And that's why one of the wonders to me of the United States, as I started asking these fundamental questions with my colleagues back in Peru, I said they've got everything on record. They found ways of recording not only where their assets are, but also how they move around and who's got the rights over what. And of course, in those conditions, you can do wonderful things in terms of combining different things to make different products and make different art and make different music. I mean, every building is recorded, every house is recorded, every piece of land, every idea, all your movie scripts. You've got intellectual property rights. You may have maybe some of them too well recorded, not enough. Your junk bonds, it's all recorded. The amount of stock in company. As a matter of fact, I can tell you right now that in all the Western world, you've got somewhere between 80 and $100 trillion of real estate assets recorded. Of all your stock in the world, shares in companies, it's about 170 trillion. You've got all of that recorded. So everything's pretty much in place. But then, all of a sudden, comes the year 2000. 10 years after the Berlin Wall fell, and it looked like the system of capitalism, mainly represented by the United States, was now going to be pervasive worldwide. My friend Francis Fukuyama would have said, the end of history. Here we're going now into the possibility of worldwide development. But then something went wrong. Somewhere around the year 2000, some people started saying, you know, we're creating a new instrument that is called a derivative, which is financial paper that is based on financial paper that is based on financial paper. CDOs, and then finally insured by CDSs, credit default swaps. In other words, before it used to be the house, and then you had to have a mortgage, and you have secondary mortgage, then all of a sudden you can take that and slice it and dice it, and all of a sudden you've got all these financial instruments that refer all the time and bring their legitimacy because they're always referring to an underlying asset. Somewhere down the line, there's that asset, which has got to be there for this thing to be tethered to reality. But you've gotten to a point where all of a sudden you've lost touch with the apple. In other words, this is an old system of navigation. On the Peruvian coast, the best way, before people even used compasses, there used to be a group of boats that used to navigate, and they could see the Andes, they could see the coast. And then those who wanted to navigate further on just navigated here. They couldn't see the coast, but they could see this guy. And this guy could navigate because he could see this guy, and this guy here could navigate because he could see this guy. And there's a moment where a few of them got lost. I think that's more or less what's happened. Then all of a sudden, I see in the year 2008, October, just about a year ago, your Secretary of the Treasury, Mr. Paulson, say it's really gotten out of hand. Because a lot of these mortgages are non-performing. So what? 7% of subprime not performing. All right, you got a drop, you got a bubbles. So what? But you don't start losing like $60 trillion of the rest of the economy, which is what you started losing. He said, no, this is toxic stuff. This is trouble. It's much more trouble than the other ones. Can't explain now. Give me $780 billion, we shall talk. So I've heard him. I was there watching from Peruvian TV, And I said, extraordinary. I saw him go down on his knees to Miss Pelosi, and she said, I didn't know you were a Catholic, I remember. And he said, I need that $780 billion. This is true, by the way. So he gets $780 billion, and I say, wow, you know, they've learned Keynes, they've understood this thing. Interesting, let's see how this develops. Then about 10 days later, I see him getting on a lectern like this one and says, ladies and gentlemen, we got $780 billion, but we've decided to go down the line of Gordon Brown, the Prime Minister of Britain, and I know I've established a program called TARP, Troubled Assets Relief Program, but I'm not going to go buy these assets as I said I was going to. What I'm going to do is use them to create a stimulus program, and I'm going to give the money directly to the banks. And I said, wow, what a change. They're really going to hit this guy really bad. Nobody hit him. I said, this is extraordinary. I said, the panic must be huge so that it doesn't matter what the fireman's doing as long as he's moving. Why didn't he do that? So I happen to have a lot of good friends in Washington. I'm quite well connected for odd reasons. I'm well connected, and I'm a Peruvian, so you can tell me a bunch of things and it doesn't matter because I'm not going to tell someone. Who cares what I tell my neighbor in Peru? So I went all the way from the White House to the Treasury and said, what happened to Secretary Paulson? And why didn't he go out and pick up these assets and clean the place up? Because what is obvious is that your recession is due to a credit crunch. A credit crunch is that when you don't have the facts and there's widespread fear that potential borrowers will be enabled to repay their loans because they've got so many of these derivatives that they may actually, if you put them clear on the books, be in bankruptcy, you could start a run on the banks. And that is a major recession. Because there are no more clear signals as to who owns what, and who's in the red and who's in the blue. And that is what paralyzes credit. That's why a recession is essentially the paralysis of credit going down. And if you don't have credit, that shrinks transactions. And if transactions shrink, then you have a drop in employment. And if you have a drop in employment, you also have a drop in the value of property. So obviously you had to clean this up. And I asked, why didn't Secretary Paulson do it? And the reply I got, and which I believe until now, is he didn't find them. Then my other friend, Chris Cox, who's head of the SEC, brings out a number. And he says, you know, we don't really know how much there are, but the evaluation of the SEC is that there's something like $600 trillion of these derivatives. Now, the GNP of the United States, the gross national product, is $13 trillion. Your whole stock market and the stock markets of the world are $170 trillion. But what's out there in them big banks is $600 trillion that people can't find. Now, what does this have to do with what I'm talking about? It's the first time in the modern history of the United States and the Western world that you've got an asset that is not recorded and that no longer obeys the hidden fundamental rule of property and control that exists ever since kings and queens no longer govern us, which is everything has got to be recorded and you got to know where it is. That, to me, was the worst signal I could get because it meant that the West, which is leading us all with its examples, has forgotten that recordation, assurance, being able to determine the facts is crucial. You now have got the world's biggest shadow economy. Not us anymore. Not the Russians, not the Chinese. You have the world's biggest shadow economy because you don't know where things are. So to me, the issue isn't, are we going to regulate them? Aren't we going to regulate them? To me, first thing, before you get into that left versus right stuff, how about counting them? How about locating them? Then we make progress. We keep on moving ahead. Let's start off with that. No, you don't understand over the counter. No. These are assets. And if you don't have them recorded, it isn't in your U.S. Constitution, but it should have been there. You have to identify yourself And these things are not identified. Now, that, of course, is the Securities Exchange Commission take on it. It's $600 trillion. But if you go to the Bank for International Settlements and follow this, since I'm interested in property, so now I'm looking at your U.S. market because that's where things are happening. According to them, it's not $600 trillion of derivative stuff that you've got. You've actually got, between you and Western Europe, $1,200 trillion. The whole world produces $60 trillion a year. So I think that one of the errors that has been created in the United States is that while before assets were viewed as apples from which you could derive surplus value by leveraging it, which is an excellent idea, that's what progress is due to, has gotten out of hand where no longer property rules govern the transaction of assets, but the financial types. The purely financial types. And these purely financial types have taken over your country. And they are now saying, you can count anybody, but don't count us. Now, if I'm as a Peruvian and you ask me, what's the value of the stuff you've got in Peru? I said, well, you know, we export copper, cocoa, avocados, asparagus, a little bit of cocaine. We got all these things. And you said, what's the price? It's in the market. And then you ask these bankers, what's the price of your derivatives? It's complicated. All of a sudden, they're not in supply and demand. We don't know. It's not complicated. It's unfair. Why? Because the market wouldn't support them at their current value. Well, if that happens in my part of the country, the International Monetary Fund and the Treasury of the United States says, you know what, you're broke, sell. That's what you do. So, from my point of view, you or the people who know about the importance of being informed about facts, this is your time, this is your place. Somebody's got to come out and tell everyone that property, whether it be on a real asset or whether it be on a representative and descriptive asset, is still an asset, the existence of which in the market is possible because the rule of law authorizes it to be, and it has to be counted. Because otherwise you can't fix the body. Let me explain a little bit further. Any one of us, the average one of us, according to any doctor, will probably be about 32 million cells. Now, the way it works is actually we're made out of atoms. These atoms relate to each other to make cells. Cells relate to each other to make organs that have different functions. Organs get together to make a person. People get together to make a society. Now, the important part for all of us is that we discovered something called DNA, which is like the title insurance of the body. It tells you how it comes together. Yeah, anybody can have 32 million cells. It's how it comes together that gives us our identity. But so you've got to be able to qualify the cells and say where they are. Cells gone out of order, too much created that you can't control, that's called cancer. You've got to be able to control cancer. You've got to find a way of cutting it out. You've got to deal with it, or you got to prepare to meet your maker, but you've got to know it. You have got $600 trillion worth of assets, and I believe, and that's one of the reasons I also came here, it might sound ridiculous, but if I went to the United States now and said, President Obama, who's your minister for property and the rule of law? He'll say, we don't have one. It's like for motherhood, we don't need one. Oh, yes, you do. You're going to have to get organized because this is really out of control. And I think that that it's going to go from bad to worse, because what you have done is not only ignored property regarding assets, but you've also, since you've used the money now to stimulate the economy, you have put, your governments, your leaders, have put something like, you've doubled the amount of dollars there is in the market now. You've doubled them. Now, you double the amount of soles or pesos, we're going to get inflation sooner or later, I don't know. Leads, lags, it depends how long they stay on the balls, but there's that amount. And so have the Chinese. So don't tell me, the Chinese are the bulwark. The Chinese have too. They have gotten money from all over the place because that's the going plan. And it may be the right plan, but then you've got to understand what's behind it so you can make the next moves. So the result now is that you've got twice as much currencies of developed countries on the market as you did before, but you've also got these pieces of paper that are called derivatives. There used to be a time in the world, in 19th century economists, when they said it was a pity that we had learned to talk about money as being the only thing that was currency, that it would have been much better if we had talked about moneyness, which is to accept that there are things that allow you to pay debts that are not necessarily money. And we all have it in our pockets. We've got dollar bills, right, that allow us, that's currency, that allow us to pay debts. But we've also got credit cards, and I can also take a mortgage, I can take a piece of paper, I can take the property of my car. They all serve for payments, they're just not as liquid. So if there's a question of moneyness, your inflation is not only the amount of currency, you've got to calculate also how much money you've actually got in property titles over assets, over financial assets that are not accounted for. Considering also that some of this derivative paper that you've got has come under an interesting name. I've got to research this, but already all the alarm bells are ringing. They're called synthetic derivatives. What does a synthetic derivative mean? It means there's no apple. It's created. It's a synthetic derivative. We did that with Latin American dictators 40 years ago. We just print away. And if you get involved with me and say, look, this is a financial sector, fellas, it's more complicated than you think it is. I'll talk to you about it later tomorrow, once I finish this meeting in New York. And I think that what we need to go back to now is to what you did that changed the world before the world now changes you, which is your property system. Your property system is clear, it's to the point, your assets are identified, you knew what you were doing, and this is the time to do two things. One, to look at yourselves and rescue your original values, which are the values of property. How do I get facts? How do I control assets? That was crucial to dominate the universe. Then the next thing that you've got to understand is that there's a lot of problems, but opportunities that are occurring in my part of the world. Because there's a food shortage, we know now that we are growing food in 1,600,000,000 hectares of the world, mainly the United States, North America, Australia, Europe, but it's not enough. And that's why the price of food is going up and started going up even before the crisis. And you're going to need new land. Most of that new land, 80% of all new land that could be cultivated is between Africa and South America. That's about 2,700,000,000 hectares. Now, what is happening at this moment is the Chinese beginning, but they're not the only ones, as they start seeing that their dollars aren't going to be worth much in the future, or there's a good chance that that happens, nor their euros, nor anything. They got the same problems we do, which is where do I put my money so that it doesn't disappear? They're going for a big land grab. And they're doing that big land grab in continents that are not yet titled. So guess what's going to happen when all of these countries starved for money, starved for infrastructure, start handing out the land to all of these companies, and yet on the land you have got a bunch of little people that actually own it and that are not in the titling system, that don't own it. It's all looking for trouble. So I think the world, even in the third world, is now ready to understand property because the conditions of the 19th century are there. And it is, if I may, I've just realized that I'm Latin American cultural problem. I talk too long. I've got, according to my, I don't even remember when I started. Keep going, all right. Okay, keep going, all right. Here it is. What you've got is this. You've got the possibility of actually going out and helping the world the way no other industry that I know of can help like yours. You've had some wars where you've lost out. And you've probably got some wars now where you're not going to do too good. You can redefine them. The surge, we're under control, only 80 people dead a day, kind of thing. But you're basically changing the definition. You're not winning that war. And you got another war coming along. Why don't we talk about the wars you won and what you did? So I'd like to do for that, if I may, just show you a few pictures. Every time I try to pitch my argument about property rights, everybody would say, how about Japan? I said, what happened? They never had a property revolution. What happened? And I said, oh, I'm not sure I understand that. And then I found out that there were no books to go on because the Japanese didn't write books about the time they were occupied between 45 and 52 by US forces. It was a humiliating period for them. That's understandable. And then Americans release their documents about wartime transactions many years later, like 50 years later, but they're always with a bunch of black smudges. Go figure it out, unreadable. So I got a grant and went to study Japan. And in Japan, I said, well, who did the reforms? I said, well, basically they were suggested by the Americans, but were carried out by Japanese. And I said, very good. Are some of the Japanese still alive? It took me a year to find out the 7 surviving octogenarians who did the Japanese reforms in 45. Japan before 1945 was a poor country with a massive army like the one of Saddam Hussein. You can be poor and have a massive army. The Russians had a massive army, still being poor, and still be poor. As a matter of fact, one of the reasons we've had such a long, big Japanese migration to Peru and Brazil is because between 1930 and 40, we had a large Japanese migration to us because we had twice the gross national product per capita that Japan did, 3 times higher than that of South Korea and about 2 times higher than the other colony of Japan, that time called Formosa, today called Taiwan. So we located after a year the 7 surviving octogenarians that pulled it off, and we found out the following thing, that once the war had begun, MacArthur said, what are we going to do with Japan once we win the war? Because we know we're going to win it. So he set up a team in Honolulu under a man called Wolf Ladijinski, who planned from 1942 till 1945 the takeover of Japan. And the general idea was, the way we're going to pacify this country and convert it into an ally and a friendship is if we give it the property system, because that's at the basis of this whole war. How so? Well, there had been 57 peasant revolts in Japan between 1902 and 1940 against the system because the feudal lords owned everything, the peasants were uprising. So the reply, the reaction of the feudal lords together with the army was, let's go out and get us some land elsewhere in Asia, ergo an expanding army, the military feudal complex. And the other thing it did is allowed you to put the farmers under discipline and in uniform, and therefore quell the unrest. So, said MacArthur and Ladijinski, if we actually give property to those who in fact control the land, because the feudal lords don't control it, they just basically collect fees, they collect, rents, and they collect taxes for the emperor. If we give it to those who really haven't given property titles, we should pacify Japan. That's what they did. So when we went to Japan and we sat down with the 7 octogenarians, so as not to fill you with a lot of words, but just a few images, we started saying, how did you do it? How were you able to identify who really owned or controlled what? So they said, well, we had to use it. We said, we know how you do this in developing countries. You need posters. How else are you going to communicate with simple people? They said, yes, we've got posters. We got the posters. It took us about 6 months. Poster number 1. We got it somewhere? You've got it? Okay. Poster number 1, you'll see 4 lines. At the bottom of the poster are the kubakus. They found out that Japan, like any country in the world, Ethiopia, you name it, Peru, Afghanistan, is organized, can we go back to the first image, is organized at a local village level. There is no such thing as people in the world who are not organized. It doesn't exist. Human beings always get organized. From the pygmies to the Eskimos, everybody gets organized. And at the bottom, they found out that there were about 13,000 kubakus, which are neighborhood and farmer associations. And they quickly went and said, all right, you've got your ledgers, you've got your leaders, who owns what? And there you see them. That's Japan poster 1946. Each one of them saying, that piece of land is mine, that business is mine. They're raising their hands. Their leaders then go to a second level and they explain the rules to the third level, which are the prefectures of Japan, as to what their rules are on a day-to-day basis. like gold claim miners in California. They explain it to the federal system. They say, okay, here are common denominators. We can standardize this. And finally, they go to the last level, where in the Ministry of Agriculture and of the Interior, the property records are set up, and Japan starts becoming a property-owning country, which it wasn't before. Can I have the next one, please? Okay, the next one, we had a photograph from the book itself. There you see two hands that tear up the Meiji Restoration. That is to say, all the reforms of the 19th century, which basically titled oligarchs or feudal lords, and then it goes back to the tables where all the neighbors decide who really owns what. It's simplified, but that's more or less the way it works. And there you can see a lady with her patches, she's poor, receiving a property title from a Japanese official, and the new record system being kept up. Then Japan passed from being an imperial, feudal, and developing country with a fantastic technical elite, but nevertheless developing country, into a fully developed country. Now, this was wildly successful. Japan turned around, Taiwan turned around, South Korea turned around, and not even 20 years had passed of the Chinese Revolution, not even 20 years, and Deng Xiaoping tells the world, I don't care if the cat's colored yellow, whatever color it has, as long as it catches mice, and China begins to go capitalist. That was MacArthur. It was absolutely brilliant. He saw where Asia was going, and he found out how to set an example so that the rest of Asia would automatically go towards what he believed was crucial, which was a property system, because he knew that civilization, as the West knows it, starts from there. That's where it begins. Can I have the next one, please? And wherever we go in the world, wherever we go, my organization goes, whether we're in Colombia, whether in Ecuador, in El Salvador, Dominican Republic, in Panama. Can I have the next one, please? Or we are in Egypt, or we're in Libya, or we're in Syria, where we are now. We have not found a shanty town or poor people where they don't actually have titles not given by government. So what is missing in all of these countries, obviously, is the institutions and the people that can bring this together in organized factual systems that will cause the trust and the assurance so that that property can be correctly leveraged and that owners can talk with each other. And if you say, well, why isn't anybody doing that? I will tell you here that I believe, after having walked the world for the last 20 years, that the only people who could possibly understand this at this day and age are you and my organization. I don't know of anybody else. There just isn't. I just don't know. I mean, there are people who will sell them maps, and they'll map them to death. There are people that send them global information systems. This is sort of global positioning systems. All of this is fine, but that's technology. Passports were done before computers were invented. The first thing to do is get the law into place. So with this, I will end by saying the following thing, because I'm sorry I've overtalked my time. Well, I'm not really even sure. First, somebody told me the other day, a friend of mine who's an American said, Hernando, we'll get out of this. Why? Because America always knows how to get out of things. Really? Why? Well, this is an incredible country. We've got the people, we've got the resources, we've got the natural resources, we've got 2 oceans. So I said, are you talking to me about the States, or are you talking to me about Mexico? Why? Because the difference between one and the other is that in both cases you're thinking that the real economy is your natural resources. Hey, we're probably richer than you are. The real economy is how you get resources organized through your property system so that they can connect. That's the real economy. In terms of who's got most uranium in the world, probably Africans. But if they can't get it organized, it doesn't mean anything. They certainly have a near-wide monopoly on cocoa beans. But the good chocolate comes from Switzerland and Belgium, where they know how to combine it. We've got the minerals between Chile and Peru and Bolivia. But the guys who can put them together are the Japanese and you guys. The resources don't mean anything if you don't have the capacity to know who belongs to what. And the other thing that is a problem and that is a problem of an intellectual order, is that because of a mistake Adam Smith made, and then Marx repeated, which is all value comes from labor, we didn't put the right thing into paper, which is all value comes from labor and from property. Because if you don't have property, your labor means nothing. We, according to the International Labor Organization, Peruvians work harder than all the peoples of the world. Second are the Turks. Doesn't help, let me tell you, you're still poor. If you are not organized in a way that you can identify things, it's not going to work. And the important thing in this sense, and I really repeat, I don't see any other way where it can happen, because it's not about law faculties, it's about people who are practicing it on the ground, and that's why you signify so much to me, is that just like you've learned over time to create respect for what Mother Nature has given us, and it's a great thing, green, respect for things that are there that we should preserve and cherish. We should always also create respect for what Father Humanity has given us, which is the legal system. That's also your tradition. And I get the feeling, I mean, we've never respected it, so it's all right. But in your case, it is something you've respected. It is something that keeps your countries together, and you're just not as conscious of it as you should be, because it's very hard for a Peruvian like myself to go around the world and say, look at these Americans. It's their property system. Look at all the information it gives them. And somebody says, yeah, but if I go and talk to an American, he'll tell me it's not that. He'll tell me that it's that he's white, that he's Anglo-Saxon, that he's Protestant, that he eats beef, that he plays basketball, that he's a Mormon. He won't talk to me about property. Well, you have to, because it is an important, it is your great contribution to human development in the 20th and 21st century. Thank you very much.
You have just listened to one of the most brilliant and original minds anywhere in the world today. This is brilliance. There are two types of simplicity. There is, I just told you three things, I repeated them, it's simple. But there's another type of simplicity, and it's the simplicity that exists on the other side of complexity. And that's what we call truth. That's what we call wisdom. When you see through the complexity to the simple again, you've really reclaimed that truth. That is what a prophet does. This man is a prophet, and you are his people. Okay? It's that simple. Do your jobs. Thank you.
I thought we Latin Americans had a monopoly on exaggeration. Obviously, we don't.
Thank you. You're going to get a chance to meet this man right after we adjourn this session, right behind the wall. He's going to be available for a few comments and a few photos before he runs back to the airport and goes back to Peru. The second series of roundtable discussions will occur right after you get done congratulating Mr. De Soto for his wonderful remarks and his insights. If you have not already done so, please stop by the registration desk to choose your table for tomorrow evening's Flagler Follies dinners. You see, these are all facts we need to know, and these are relationships we're describing, and they're really mundane after such a brilliant insight, but they're important. So I'm going to keep going. Professional development sessions begin this afternoon at 1 and 2:30, and an event close to my own heart, the Mike Willey Memorial Tie Pack Golf Tournament begins here at 1. And finally, we have a winner of today's Early Bird Prize, a complimentary registration to ALTA's 2010 Business Strategies Conference, Mr. Rick Eberall. Ladies and gentlemen, this concludes today's general session. I hope you enjoyed yourselves.